Thanks for joining us for the July Performance Snapshot. With us is Ken Hines, President of HFR Inc. Thanks for joining us, Ken. How is
Thanks for
July
having me
looking
on.
so far?
July's been an exciting month. In the past few months, we've seen an acceleration of geopolitical risk and election risk to historical dizzying heights. And I think that continued in the month of July with election risk and geopolitical risk reaching levels that are generational, unprecedented, and you almost run out of words thinking about it with everything that is going on in the not only in the US but in Europe and throughout the world. There's a tremendous amount of uncertainty as it pertains to geopolitical risk and election risk and policy changes. And you see that affecting financial markets. Interestingly enough, it's affected them very favorably recently in the last couple of months, particularly in July. You saw very positive equity markets continuing to hit new highs, while at the same time, interest rates fell significantly in the US, led by a decline in short rates. And not surprisingly, hedge fund performance has been strong through this period of both favorable markets, but significant uncertainty in the geopolitical and election front.
So, at the strategy level, what has been our best performing strategy so far?
Yeah, we saw a return of macro strategies. Those that watch these videos regularly know that macro was the leading area of performance for the first 4 months of the year and then fell off a bit in May and June while equity hedge continued to be strong. But really, macro and equity hedge are really almost in the same place in the first 2 weeks of the month. You can see 90 basis points and 88 basis points. Fixed income based relative value is actually 87 basis points, which is exactly where the index is. So really, as you look across all four main strategy areas, you have almost identical performance down to event driven with a gain of 83 basis points. And the overall index gained 87 basis points in the first couple weeks of July.
And drilling down to the sub strategy level, what has been faring the best?
Yeah, the best performing area by sub strategy in the first couple weeks of July is convertible arbitrage, traditional convertible arbitrage, which, as most of the viewers know, is favorably disposed towards volatility. It's essentially long credit, and yields fell, credit spreads tightened. Volatility, there was still a fair amount of realized volatility, and there's obviously a component of long bond, short equity, as it is an arbitrage trade. So that area gained 1.75% for the year. 1 5/8 for merger arbitrage, which, as you know, as we've seen somewhat of an inflection point in the markets in the last couple of weeks, where we've seen a broadening out, it's an important trend in the equity markets, seen a broadening out from just the top 7 or 5 large cap technology to seeing less of the gains that less concentrated in those, and you're seeing strong gains in small cap. You see those that showing up in merger arb and event driven strategies, and we expect that to continue into the second half of the year. 1.33% gain for macro systematic diversified. We know these are trend following quantitative CTA strategies that trade across many different assets, sometimes hundreds of assets. 1.33% gain there. 117 in fixed income credit, which certainly with rates falling and credit spreads tightening, it's not surprising to see 1.17 gain there. And 113 in equity hedge fundamental growth, which, as you know, has been a strong, steady performer throughout the first half of the year.
Okay, and then year to date, how are the strategies holding up?
Yes, equity hedge continues to be the strongest area. You can see here a gain of a little better than 6% thus far in the first 6.5 months of the year. That obviously includes strong contribution from quantitative directional as well as fundamental growth and fundamental value. We'll talk a little bit more about those sub-strategy drivers on the next slide. A little better than 5.5% gain in the macro CTA, which obviously reflects, as I said earlier, strong leadership in the first 4 months of the year, and then a little bit of inclusive of a little bit of a pullback in May and June. We're again seeing strong performance in the macro CTA space. Overall, the HFRX Global has gained 3.8% in the first 6.5 months of the year, with the two strategies, event-driven and fixed income-based relative value, both gaining a little more than 2%, or right around 2% thus far in the first 6.5 months of the year.
Okay, so the sub-strategy drivers that you mentioned year to date.
Yeah, you've seen this actually be pretty steady in the last couple of months, with fundamental growth and the HFRX macro systematic diversified on a year-to-date basis. Obviously, from the fundamental growth, it's been a steady performer, up 892 thus far, nearly 9% for the first 6.5 months. Systematic diversified did have a pullback in May and June, but still being in the top area of performance for the year really just shows you how strong that beginning to the year was, because even with a pullback, it's still the second leading area. That compares favorably with U.S. large cap equities, 6.7%. I commented earlier on how we've seen a broadening out of that equity market gains in the last couple of weeks, from being concentrated in a few large cap technologies to a broader base, including small caps. 465 for fundamental value, and 4.4% for equity market neutral, which, as you know, is a mean reverting strategy. It's based on factors and generally market neutral in a dollar sense or in a beta sense. And then convertible arbitrage, 367. As we know, that was the leading area of sub-strategy performance in the first couple of weeks of July.
Wonderful. And that wraps up the performance snapshot. Thank you, Ken, for your insights.
Yeah, great. I just wanted to point out that we do have the new website up and running. It's been a couple of months now, so if you haven't visited it, please visit www.hfr.com. If you'd like to set up a call with myself, or you can send an email to me, Ken Hines, or to indices@hfr.com if you have any questions about anything we talked about here. If you're watching this video, you know we do regular performance updates and commentaries on YouTube. Please subscribe to the channel. And if you have questions that you'd like to see us talk more about on future videos, happy to do that as well. And then finally, when you visit the website, you can click on the Investor Guidebook, which is a great resource that we have there. Talks a lot about the use case for the HFR investable indices, including the HFRX, the HFR 500, and any of the other ones. Talks a lot about how global financial institutions are using these indices. So I think that wraps it up for today, and I look forward to speaking with you next time. Thank you.
Thanks, Ken.